investing in FinTech in Africa, the good, the bad, and the ugly. I have with me 3 panelists, Sheena, Stephen, and Adaeze. They will be introducing themselves shortly, and then we'll go right into the conversation. So over to you, Sheena, then Stephen, then Adaeze. Thank you.
Great, thank you so much for the intro, and I'm really excited to be here. So my name is Sheena Raikundalia, and I'm the Country Director for the UK Kenya Tech Hub. I'm based here in Nairobi. So by way of background, I'm a failed entrepreneur in the insurtech space. So from the other angle, I have I can definitely contribute from that angle too. But currently, as I said, I work for the UK government, which is DCMS, the Digital Culture, Media and Sports Department, through an international network of tech hubs. And I think my colleague Adaeze is also the hub director from Nigeria. So we're a Pan-African hub with South Africa as well, and actually global with Indonesia and Brazil. Prior to this, I used to be a lawyer in London for 10 years, don't hate me. and since then, I've also been in the impact investing, angel investing space, where we actually set up an angel investing network here in Kenya, and also brought a impact investing fund from my previous organization. So very excited to be here and look forward to this conversation.
Thank you very much, Sheena. Stephen?
Thank you, Ayotomi, and really glad to be here for this session. I think FinTech is a really big thing. I think we've seen the waves which are being done by some of the big FinTech players, so really excited to share some thoughts around that. By your background, Stephen Gugu, an angel investor and the Victoria Business Angels Network, which is I think one of the second earliest angel networks in the country. We have 46 paid up angel investors in our angel network. One of the co-founders of the angel network. So far, we've done 7 investments. And lucky for us, no fintechs there. We had participated in some of the ones that we saw really early. Apart from that, I'm also the vice president for the Africa Business Angels Network, looking at East Africa. And that means that then we try to support from Kenya, some of the other countries in East Africa in terms of setting up angel networks and some of the challenges they go through, just giving them some of the experience that we've learned as Victoria Business Angels Network. And then the last thing that I think is relevant here is we've built a platform called the Africa Angel Academy with some sponsorship from the UK International Tech Hub. And that platform is training angels from across the continent. And that's some of the considerations we're going to be talking about today is around how do we get more angels to invest in fintech opportunities and just generally to angel investing. So really excited to be here and looking forward to the conversation.
Thank you, Stephen. And over to you, Adaeze.
Hi, everyone. I'm Adaeze Soka. I'm the country director for the UK Nigeria Tech Hub, so based in Nigeria. Along with my colleague Sheena, we support sustainable digital ecosystems. And what that means is supporting high-end digital skills, supporting startups, and fostering linkages between the UK and Nigeria, and of course, the other African countries or other countries where we have the hub network. So really excited to be here. By way of background, I've been in the Nigerian ecosystem for about 6 years, just supporting the growth of technology companies and facilitating investments in those companies and also driving policy. So I don't know how to write a line of code. I don't own a fintech company, but I am a facilitator and a supporter for the ecosystem. So just driving more policy, more interventions that enables the fintech ecosystem as well as other ecosystems in different sectors. So really excited to be here and really looking forward to this exciting conversation. Over to you, Ayo.
Okay, thank you. Lovely. So we're going to have 5 minutes each. I think from your respective markets and your respective roles, how you operate in the ecosystem, just share with us your experience, your experience in the sector, in fintech, working with businesses. I think in Stephen's part, trying to raise funds, angel funds for fintech firms, how regulation affects that, how the firms are positioned, just share with us, how it's been. I think we can continue in the order in which we started. So Sheena, over to you.
Great, thank you. So I think, so for me, what I would say is So one of the things that I would, and we say this all the time, fintech is one of the largest growing sectors, and we've seen this with some of the exits. We've seen that, especially in Nigeria. Actually, you guys are the kind of leaders in this space, and we've seen it, and it's exciting. But I think I always go back to, as much as we all talk about tech, right? What is tech? Tech. When we talk about fintech, what do we mean? We're basically saying we're using technology or technology is an enabler to get financial services and products to those people that need it the most. And I think if you start with that definition of fintech, that's where I sort of come in. Although fintech is really cool and exciting, I think we have to be very careful not to get caught in the bubble of fintech and just creating apps for the sake of apps. So I think to the fintechs out there, if you are sort of creating, if you're focusing on a real problem that a fintech solution can solve, so a tech-enabled solution can solve. And why tech-enabled? Well, the reason why we always talk about tech-enabled is because we're looking for scale. We're looking for innovative business models, and technology can be that enabler to do that. So I think when I look at fintech, I think we look at the whole financial, the supply chain, and you look at it from the problem angle. So what is the issue probably in Africa? And of course, Africa is not one country. There's lots of different, there's lots of different nuances. And, we can speak from a Kenya perspective, Nigeria's perspective, South Africa, but the different countries obviously have different perspectives. But the point of fintech or financial services, what we're trying to say is, how do we get financial services to those who are not included? Now, that doesn't necessarily mean banking, because we always use the term unbanked. There's a large population of unbanked. We've seen in Kenya with the mobile money revolution, a lot of people don't have bank accounts, but actually are functioning really well with mobile money. Since COVID hit, actually, I can't remember the last time, I've actually used my bank account. I've just been using my M-Pesa for about pretty much everything. So I think we also need to realize, what is it that, what does unbanked, what does financial inclusion mean? And what are we trying to do? Normally, fintechs, I think, is broken down into sort of four things, right? We focus on lending, we focus on payments. And I think we've seen a lot of that happening. And I think the buzz of the market is around lending and payments because, it's a huge market, it's an untapped opportunity, whether it's B2C or B2B. But there are other aspects, right? There's also the savings, there's insurance. So I think it's also looking at fintech and looking at what are the different areas. And then I think going even broader. So my definition of fintech is not just pure financial services, but it could be, for example, providing agri-insurance. So that's agri-tech or agri-insurance, but it's fintech spread out in different sectors to really make an impact. So how is it helping the agriculture sector? How is it helping health sector? And we're seeing a lot of things in the health sector with health savings, health payments, and things like that. So I think when we look at fintech and when you're looking at raising for fintech and you're looking at the market, it's really important to just think beyond an app and think beyond payment and lending and look at like the broader challenges and what it's trying to solve. I think we can see from the numbers, fintechs are the ones that have the most buzz, have attracted the most investments, and for good reason. But I think we have to be very careful into really understanding what fintech means, why it's so exciting, why are investors interested, and what we can do to really support that space to create sort of high impact. We really want to see solutions. We want to see more people included in financial services, not just for the sake of being included, not for a tick box, but what does it mean? If I'm now included, what does that mean? Does that mean I can start saving? Does that mean I no longer have that poverty trap? Does that mean, what does that actually mean? And I think for fintechs, looking at those different angles and saying, how do we get the unbanked, whether it's credit scoring, AI, or whatever it is, whatever the solution is, I think is not as important as the problem that they're trying to solve. So I'll stop there.
Thank you, Sheena. Stephen, do you have anything to say?
Yeah, thanks, Ayotomi, and I think Sheena said quite a number of some of the thoughts I wanted to just put out. But I'm going to look at this from an angel's perspective. So indeed, fintech is big and fintech is growing. I think as I was preparing for the panel session, I had a look at some statistics that I saw from M-Pesa, which I think is synonymous with payments in Kenya and maybe even fintech to a certain extent. So in the year 2009, M-Pesa was contributing to around 2% of what Safaricom was generating as a revenue. Since then, it went on to grow 36.5% every year. And just this year, when Safaricom was announcing their financials, they mentioned that M-Pesa is now the biggest contributor to their income at 31% or thereabouts, right? And that just shows you just how big this is. And the best is yet to come. if you want to think about it from that perspective, because the more pervasive that then, you have your M-Pesa everywhere, the more people then keep using it for different opportunity. I think Sheena spoke about aspects like, whether it's agri-finance, whether it's edu-finance, every other app that I'm interacting with, even in the logistics space, everybody has a wallet that they're attaching to what they're doing every single day. And then there's a lot of payments that's running through that. So as you can imagine, it's just getting bigger and bigger. And so for us from an Angel perspective, and just taking our own experience of the ground up for Angel Network, we've had a look at quite a number of fintech opportunities. And unfortunately, we've not made an investment in the fintech opportunity. And maybe just a couple of thoughts just there is that, number one, well, fintech is so big. I think for most angels who are not, if you speak some of the angels that we have, they're not coming from the technology space. They need to understand what exactly is the opportunity and how does that evolve. And I feel there's a big aspect of around just educating investors for them to understand, yes, as we're saying that this is going to grow, what avenues, what channels, what verticals are we looking at, and how would that likely grow? So there's a whole element around educating a number of investors for them to better understand that. And I think our Angel Network, at least, we felt that has been one of the challenges. And then the second thing is that everybody who comes to us comes with everybody wants to be Paystack, Flutterwave, and the valuations are just ridiculous. So you're comparing what the company is and where the company is saying that they're valuing themselves, and it's really, really high. Everybody's looking at the Silicon Valley valuations or the Nigerian valuations in this case, and we want to all aim for that. So one bit that I've seen is, just as you come into the market, if you want to raise money from investors, you need to be a bit humble, educate, number one. Number two, your valuation has to be also very relevant to the market that you're looking at. And I think just bearing in mind that some of the angels that you're bringing on board, you're bringing them on board to be able to help you to unlock some of the doors that you're looking at in the first couple of years of your startup, and then really rival up the valuation that you're looking at. So I think that's another element I want just to speak about. And I think let me stop there at the moment. But as I mentioned, the opportunity is big, all the way from wallets to payments to loans. I know it's really fascinating, and I feel like right now, since it's one of the hottest topics, we'll definitely end up making some investments in our Angel Network.
Thank you, Stephen. Adaeze, do you want to come in, please?
Yes. So it's really a good environment for fintech in Nigeria. I mean, fintech has gotten a lot of investment and has really started to transform financial services. I mean, we've already been mentioning it on the call, from InterSwitch, which sort of paved the way, to Flutterwave, Stripe acquired Flutterwave, so Paystack, to Flutterwave and Sendwave, Piggyvest, and a host of other different fintech companies. And we're seeing that there's a fear of missing out. So lots of people want to now sort of get a slice of the pie, whether they're startups also wanting to be like the next Paystack, or investors as well wanting to benefit from potential value in investing in such types of companies. And we're asking, so what's causing this increased demand? Causing this opportunity or rise in successful companies is we're seeing increased demand in mobile money. We're seeing increased demand for better banking services for corporates. We're seeing increased demand for cross-border trade, payments, wealth management, and also financial inclusion. And so most of the tech companies that we're seeing coming out are trying to address some of these value chain gaps. But regardless of the growth, Nigeria's economy is still very cash-based. Payments are not as seamless, especially across borders. And there's still lots of value chain gaps, as my colleague Sheena said. So I think that it presents a good opportunity for more types of fintech products that are addressing those value chain gaps. And I think that while everybody tries to want to be the next Paystack or Flutterwave, there are lots of other areas within the financial services value chain that we need to try to close those gaps. And I think the big question is, what kind of value are we providing? What value are you providing to the economy? What value are you providing to the investor? And I think that's really big. The thing that could go bad with this entire opportunity, or even seemingly progress, is also people building for the wrong incentives. I think my colleague Sheena mentioned it very well. Is it that every company that has fin and tech is a fintech company? So there's a potential to actually have poor quality deal flow where everybody's trying to be the next big thing, versus looking at how to really tackle real financial challenges. The space is getting very competitive, and so there would be questions around what are the real fintech companies, who do we actually invest in? And this could be very difficult. So while we are educating angels, we do have a program, Angel Academy, where we're raising angels in the continent to invest in early stage companies and provide that financial capital. But we're doing that, there's also the need to support quality deal flow. So there's need for a pipeline of fintech companies that have market insights, understand the value chain gaps, that have good valuations within the context, as my colleague said, and are really providing solutions. And I think that what could really get ugly is really when you have these two things, we have the solutions, investors are happy, and then we have poor regulation, right? So at the same time, we've seen uncertainty in regulations in Nigeria, and but at the same time, we are seeing that there's conversation and there's dialogue between the ecosystem and government. So there is need for better regulation to ensure that we maintain this momentum and there's no disruption in the growth that is happening, not just in Nigeria, across the continent. So better policy regulation is key. So in summary, I'll say that while there's opportunity, we need to make sure that we are maximizing those opportunities, we're closing those gaps, we are producing better deal flow. So no wrong incentives or motives here, especially from the startups, and that we are, providing the enabling regulatory environment to sustain the growth that we are seeing on the continent. Thank you.
Okay, thank you, Adaeze. From what you said, I was just thinking to myself, in the last year, since COVID, we've seen quite a lot of activities in the fintech space. We've seen new startups in the fintech. And I think obviously because of the restriction in movement and need for financial services to continue to grow, there's been more innovation. And then we've also seen some financing. So, Paystack, Flutterwave, these were transactions that happened in the middle of COVID, when you would have thought business would be slow or the sector would be slow, but the reverse was the case. So it then brings to mind, to me, is the sector in Africa actually ready for that for investing? Is the fintech sector in Africa ready to take on the global market, to attract investors, to provide solutions, that would put Africa on the map, that would meet the African need? What's your opinion on that?
This is for me, right, Ayo?
Yes, I did.
Yeah. I think it is. I mean, it's already attracting investment, right? Most of the investment that have come in are mostly foreign investment. So I think it's ready. It could be better. And that's where, and I think that's where policy comes in. So in terms of attracting investment, yes. But I think that what we need to do more is provide more fintech solutions that are addressing the market gap. So a lot of people are still unbanked. And if we're going to have have more access to market for the fintech companies, we need to get more people to be financially included, whether it's through mobile money or through the banking services. So I think that that's a very big point. And I think when they start to have more access to market, there's more interest in investing, and then there's more opportunity to scale this beyond different borders.
Okay, thank you. So Stephen, I think this question comes to you because Adaeze mentioned the point now that most of the investing we've seen in the space, has been from foreign investors, which is where you come in. You're a local player. So why is it that the local investors do not see the opportunity or are not the ones taking advantage of this opportunity, to scale up the fintech operators that we have in Africa?
Thanks, Ayotomi. So I think first I have to say that it's not that they don't see the opportunity. Actually, there's a number of the big fintechs that have even exited. If you just take an example of Paystack, at the Africa Angel Academy, we've done a case study that is going to be released on Paystack. But if you look at some of the initial investors in Paystack, they are angel investors, the investors within the continent, right? In that case, we'll speak about some of those investors who are sort of like featured. I think we have the lady from Aggressive Capital was one of the investors in that deal. So they're seeing the opportunity and they're making investments in that space. I would argue, though, that maybe to a certain extent, we're a bit late to the party. This should have been happening very early on. The angel investing ecosystem in the continent is still being formed as we speak today. And here I'm speaking about angel investing because once you go to venture capital, a lot of that capital is coming from outside. It's not necessarily coming locally. But if you look at the angel investing ecosystem in the continent, apart from the likes of Nigeria, Egypt, and to a certain extent, South Africa, who sort of like, are the leaders of the pack from an angel investing perspective, and just not even looking at FinTech. And that's where a lot of the other new angel networks are learning from. It's a new thing that's being developed. And right now, that's when angels are getting more interested when they see some of these exits that you're speaking about, some of these big fundraisers. And I think they're playing a huge role. Even if angels did not participate in some of those initial rounds, they're playing such a huge role because angel investing is also about the hype, right? Where do we all go to invest in different stock exchanges, pieces of land and so forth across the continent? It's because we've been told that there's a guy who made 10x, 20x their money and so forth. And now with FinTech, the FinTech opportunity, angels are being told there's a guy who made 30x, 50x their money, and now they're like, oh my goodness, I need to be part of this conversation. But then going back also to what I mentioned, that there's also quite a bit of education that needs to happen with the angel investors. And not only in terms of just how to invest, but in terms of how to understand the opportunity that FinTech is. Everybody says that FinTech is big. Everybody comes to you and tells you this is a $5 billion, $10 billion, market. But at times, the route to market to be able to understand exactly how a startup generates that kind of value, and especially taking into account the amount of competition in this space. Because remember, this is a space where you're competing with any international company that's able to launch. For instance, if you come to Kenya and look at the payment space, if you look at Paystack and Flutter, they're in this market and they're doing really big business, right? M-Pesa, as we speak today, has moved on to Ethiopia, and I think the model has been copied in several other countries. So there's this fear from investors in terms of, how are you going to deal with competition? If you're a startup that's starting today, yes, you've really innovated around what you're going to be doing. You have your the software that you've been able to put together. But then, are you strong enough to withstand the amount of competition? One, and then there's, of course, there's always a question mark. The most investors tend to ask because they tend to be conservative, which is regulation. How are you going to deal with regulation when that comes up? And in Kenya, we saw a very regulation rearing its face, where most of the digital lenders that were there during the COVID period, the central bank came in quite strongly and said, okay, first of all, we need to regulate all the lenders. Part of the regulation is going about registration, trying to cap on the interest rates that they're able to charge in the market. And so there's this, what do you call them? There are unknowns in the FinTech space that at times investors are worried about that. So, and that's why I'm saying that there's a lot of education that needs to happen for investors to appreciate the opportunity. And then lastly, is to deal with this question of valuation, where if you look at all the types of investments that we see on a day-to-day basis, FinTech is the most highly priced. And at times it's very hard to wrap your head around that and say, okay, should I be investing in a company that's, just gotten started, $5 million valuation, $10 million valuation, well, I can see another opportunity in the logistics space, in whichever other space at a much lower valuation. Yes, I know that people say that FinTech has a much higher growth potential. You can generate much more income. But then, there's that play that angels are still trying to figure out how to contemplate.
Okay. Thank you, Stephen. Sheena, Stephen had mentioned regulation, and I think it's best to pose this to you and Adaeze because of your work with the UK, Nigeria, and Kenya Tech Hub, respectively. What is the regulatory environment like in Africa, and what do you think should be the forward look for the regulators to open up the FinTech space for more investment? Because from our investing point of view, investors are only comfortable when they know what the regulation is and they know that it fintechs working in the space and seeing how regulation affects, them fintech operations.
Yeah, no, it's a really good question, and it always comes up. And I had a really interesting, actually, corporate roundtable just last week, which was hosted by our Deputy High Commissioner. And a lot of the corporates there, they were sitting there, and some of them were like some, big CEOs of some of the leading kind of financial institutions in Kenya. And some of them actually said, if M-Pesa were to come out today, they're not confident that it would actually get the scale, it would get to where it did. They think it would be squashed. They're like, actually, M-Pesa worked the way it did back in the day was because that the regulator kind of had that approach. Let's see how it works. Let's wait and watch and see what happens. Now, the question then always becomes, there's a balance, like, because why are regulators there? Regulators are actually there to protect. Let's not forget, they're also there to protect consumers, right? Somebody has to speak for the consumers. So there has to be a real balance between protecting the consumers and stifling businesses. And secondly, with how fast technology is moving, regulators are never going to be able to catch up. It's just not going to be the case. And when we look at, for example, and this was an example you mentioned in terms of the global environment. I mean, let's look at the big four tech companies. And yes, arguably Amazon, Apple, they're not financial players, Google, but we're looking at fintech, but then you're looking at tech fins, technology companies who are looking at the financial space. And if you look at the kind of power that they have, the kind of data that they have, they're basically, we had too big to fail. They're kind of too big to be regulated. That's not a good situation either. Then we look at China and we see what happened with Alibaba and the clampdown that happened there. And of course, that sense kind of shocks the market. So if we look at the global regulatory space, there's always going to be that tension. And I think regulation cannot catch up with regulation. So it's really, we do have to start thinking about how do you create an enabling environment that that doesn't stifle innovative ideas and startups, because we need that. At the same time, we have to have that consumer market protection element. And you can't also have some of the companies getting so powerful that they're actually dictating and soon going to be in control. So there's a real balance, and it's a really tricky situation. And honestly, I wouldn't want to be a regulator, at this space. I'll be very, very honest. I mean, it is really tough. But I think the second point then is, and this was a question I think you had posed earlier, which is, what is the opportunity for, is there an opportunity for like Africa, for Africa fintechs here to go globally? And slightly controversially, I'll have to say, local context is very important. Like, I love M-Pesa. When my sister came to visit me from London and I was just showing her about M-Pesa, she was like, oh my God, this is so long. Like, I just scan my card and pay everything. So wouldn't M-Pesa really work there, where I have to enter my PIN, I have to show the waiter my card, the scan doesn't work? I'm not really sure. M-Pesa solves the problem for us here in Kenya and potentially in Africa. And there may be some fintechs who have solutions that are right for the global market and some that are not, and vice versa. So I think sometimes, we also get so big on this hype for globalization, or even the Pan-Africa market. I mean, at the moment, what's most exciting for me is, Africa, like the Africa Free Trade Agreement, the fact that Africans can, we're trying to get more Africans to trade with Africa. And that could be the opportunity in cross-border payments. I'm not saying don't think big, don't think the globe, but if you focus on a problem, if a lot of the people, and I'm not saying mobile money shouldn't go to the UK, that is also not what I'm saying. But for me right now, M-Pesa, I don't even think twice about typing up my PIN code, showing people the vouchers and stuff. Like my sister, like I said, was, oh my God, this is a pain. I would never want this. Thank God for my card. Whereas I barely used my card. So I think so again, and same thing with expansion, with globalization, with regulation. Context matters, and it really affects, I think, investors, because I think Stephen put it right. Investors also have to be confident about what they're investing in, and they have to really understand, what fintech really is, because otherwise you can get caught up in the hype. Having said that, right, is the VC model actually appropriate? Is a Silicon Valley model appropriate for Africa? Arguably not, right? They have lots and lots of capital. And yes, we've got some examples of these fintechs earning a lot of capital, but is that going to be the case here? Or should we be focusing on not this unicorn, but maybe what they call gazelles or camels or whatever else phrase there is, which is, businesses are solving local solution, they're solving problems for the local market and can maybe scale into regional players, maybe, earning, revenues at the same time. And maybe they won't, have a buyout, and maybe they won't, have a unicorn valuation, but actually are solving a problem, helping economies run, creating jobs and creating wealth. And maybe that's okay. Maybe we need to stop following this, Silicon Valley model, especially with the hype of FinTech. I think FinTech is really important, but like I said, it goes back to your definition of FinTech and what FinTech is solving. So I'll stop there.
All right, thank you, Sheena. Adaeze, I'm going to come to you now, but in addition to the question I asked Sheena, I'm just going to throw in just one more bit. What is your take on having an incubator system in FinTech in Africa? There's quite a synergy between the African markets, and I think even going forward, that's the idea, to synergize the entire market. So incubators for the respective markets, and then they're able to share the solutions that they come up with across the market would be one that would help to see FinTech grow in Africa, and then help the investors have a clearer understanding of what the sector is doing and why they should invest in it.
Yes, absolutely. I think what you're describing does exist, and there's probably room for more. So for me, it's not about the fact that it's an incubator. It's about how that incubator is designed and what types of problems that it's designed to solve. And I think what you're even describing is even what is called financial regulatory sandboxes, where, for example, startups are allowed to experiment and come up with solutions with under regulatory cover. So for a period of time, they don't have any regulatory expectations, and that gives the opportunity for the startups and the regulators to understand each other, right? And then that informs, policy design or whatever regulations that will come out from there. So there's that model, and it's not actually, we've done something similar in Nigeria that they've actually announced it with the CBN, but how it's been practiced is still what's being studied. So maybe next time we would to answer that. But I think in other countries, we've seen that has worked and that hasn't worked, not because the idea of regulatory sandbox is faulty, it's just how it was implemented. So that's on the one side. With traditional incubation programs, yes, we have other programs like the African FinTech Foundry, which just focuses on FinTech companies. Again, is the role of the incubation. One, are you actually solving the problem, and for what market are you solving the problem for? And how are you galvanizing resources and network and the opportunities around you to be able to produce companies that are actually doing well? I like what Sheena said. It's not really about the whole hype, but really focusing on coming up with one or two really good companies that are addressing value chain gaps. In terms of regulation, right, there's a lot of innovation is moving very fast. The regulators they see the value, but it's moving so fast they can't understand it. So it's like everything stops. So there's the bans and all of that going on. But the intent is not to, I don't think the intent is to stifle innovation. I think, of course, regulation has two objectives: promote innovation, protect the consumer. And I think in the bid to protect the consumer, their mistakes are being made. So I think the best way for us to promote good regulation, enabling regulation, it's not the job of the regulator alone. This requires both the regulator and the FinTech ecosystem, all the key players, to come together and have a conversation around what types of policies should we enact. If it's licenses, depending on a different context, do we reduce the cost of licenses or make the processes simpler? Whatever it is, that conversation needs to happen. Nigeria is currently trying to pass a startup bill. And even though it's not very sector focused, but the idea is to, again, support laws that promote innovation and protect the consumer, but it's also calling for continuous conversations where there are consultation forums where stakeholders and regulators can have a conversation around understanding each other in terms of how innovation helps the economy, and understanding what policies can actually continue to drive innovation and at the same time protect the consumer, which the regulator has the rights to do. So I think that's it. I think that the key thing to note is, again, can we continue to solve problems and create an ecosystem that supports fintechs to do that? And then can we continue to have conversations where fintechs also have a role to play? It's not just the role of the government to create policy. So can we be on that table and really have honest and open conversations around what policies will work for our context in different African countries and maybe globally. Hopefully with the after, we're able to bear this in mind and see how we create an ecosystem that works for the continent.
Okay, Adaeze, there's a follow-up question here from one of the guests in the audience, Ven Madela, and he asked, what African countries have the sandbox models that work for innovators to play in? Yeah. So can you quickly just, give examples of the countries that have that?
So in Africa, they are still testing this out. I know Ghana has one. So they're working very closely with Financial Services Development for Africa to test out regulatory sandbox. Kenya has one as well, I think. Great. Somebody's confirming that. Okay, so Kenya has one. Nigeria has one that is still being implemented as well. So we're still studying that process. Those are 3 countries I know. I'm sure other countries have, but those are the 3 countries that I'm sure have one.
Okay. Stephen, I see your hand up.
Yeah, so I just want to speak a bit more about the, this regulation question, which, yes, it is a tough question. And, I share in the sentiments made by both Sheena and Adaeze in terms of just how tough it is for regulators and where to play in. But if I just take, for instance, the Kenyan case of, digital lenders, and the kind of interest rates that we've seen being subjected to consumers, and these are consumers who don't even understand the true cost of what they're borrowing and the hidden costs which have come with that and so forth, right? I mean, if you look at the continent, I think one thing we have to accept is that our consumers, most of the consumers, do not have the level to be able to read through, all the documentation that comes through. And then if you look at even our consumer protection bodies, they're not at the point where they're supposed to be in terms of protecting consumers. Right. And so I feel like, FinTech players, and this not only applies to FinTech, but any sector, they sort of like come in and they start approaching some of the bodies because how I look at it is that there's always the really good players who are sort of like saying, let's scale a very responsible business. Right? And so it's upon the responsibility for the people who want to scale and to do responsible business and so forth to reach out to the regulators. I think, and we have a conversation and start moving that discussion around regulation, because most often what we've seen is if you wait for the regulator to come in, they'll cut to the bone, because they don't understand it as well. So they'll just say, what, we don't care who's doing what, we're just going to cut very straight to the bone. So regulation is such a critical thing, but I think that's one way that FinTech players can play a huge role. Right. And maybe just on the question of the sandbox, just to mention just something, one of the startups we reviewed a couple of years back that we need to invest in, was actually just qualified from the sandbox in Kenya by the Capital Authority, and now they've been sort of like deemed good to go, and they're out there now.
So we're running short of time.
Okay, sorry.
So I'm gonna give you about 30. Give everyone about 30 seconds to give their last remarks. So you can add that to what you're saying, and once you're done, Sheena, please go 30 seconds, and Adaeze, to just give your last remarks.
Okay, thanks. I think I already made the point that we've seen startups graduating from the sandbox, which is a big positive that these things do work. Of course, there's a bit of work to be done just to make sure that they move as fast and they're good from that perspective. But really, the opportunity for FinTech is big. If you look at the continent and look at all the things that needs to be built almost from scratch. All the, if it's in the agri space, if it's in the energy space, in the water space, and so forth, and all of that, whatever happens, there's going to be a layer of financial, FinTech behind that. And so the opportunity is big, and I think investors should be looking to invest in this space. Thank you very much.
Thank you, Sheena.
Great. I think my point is, my point will just be, one, FinTech entrepreneurs, what you guys are doing are awesome. What I would suggest is focus on the problem, but also think about your context, right? Like, which market are you focusing on? When you go to speak to investors, try and, don't just go in with the tech language, the hype, etc. Go in and talk to them like you would to a 5-year-old, saying, this is the problem, this is the solution, this is how you can make money. They don't want to hear millions and millions. At the end of the day, and I always give this example, and I'll end with this. I still pay for my sister's Netflix in the UK. When she was in university, she begged me to pay for my Netflix account. I had a bank account, direct debit. And you know what, 10, 15 years later, I'm still paying for it. It was 99p or 50 cents or some 50 cents when I started. I think it's probably £5-6. It's very sticky. It's very easy for tech to scale. In Kenya, I still have Netflix. I pay monthly with my M-Pesa. So it's not, what I'm saying, it's a very different environment. So to fintechs, go to your investors very practically. Investors, it's up to you also that you don't miss out on these opportunities. So go with an open mind, ask your questions. And yeah, that's what I would say. And pass it over to Adaeze.
Yeah, sorry, Adaeze, I was going to get your remarks, but we're pressed for time. Thank you, everyone, for having this conversation with us today. I hope that our audience have been able to pick a thing or two from the conversation, and hopefully we're able to see the fintech sector continue to grow. African problems. Thank you, everyone. Thank you to my other panelists, and thank you.